Hey all, welcome to ShareTreck. This is Raj here. Good morning. It was a wonderful weekend and yesterday was good. I didn't do much of videos, but today it seems that we are in store for excellent action, at least for the short term. And my thoughts are that the futures are looking good for all the three indices that we track. Dow is up 0.32%. In pre-market trades, S&P futures is up 0.25% and Nasdaq futures is up 0.30% in pre-market trade. Oil is going down. This is what we want to see most of the times, but we don't get to see. So it's all looking good right now. And I'd like to move directly into our indicators. If you look at Dow Jones, it is absolutely bullish. It's up 0.78% in pre-market trade, and it's above the support that we have of 43,294. Right now it's at 43,487. So that's a good positive for us. MACD momentum all looking good. S&P 500 also is up almost 1 full percentage point in pre-market trading out here, and it's above this diagonal line of resistance of the previous wedge that we had. So I'm going to convert that into a support. So we are looking good here as well. Both MACD and momentum looking very good. Well, IWM is up 0.52% in pre-market trades. MACD is looking good. Momentum needs further improvement. It remains to be seen whether we get a green candle or a red candle and whether we close above the previous day's close. We'll watch that and see what happens to these small cap companies. Nasdaq is up 1.66%. It's made a clean break out of the bull flag that we had there. We always expect bull flags to break upwards. MACD is on the mend. Momentum is above average. So I'm looking forward to good things happening today. And with that said, I would like to have a quick look at put-call ratio. Put-call ratio is getting more bullish. It's down 19.41% and going very close to 0.70, which I think is the peak of bullishness. So that setup is also good. VIX has gone up 0.57%, not much in pre-market trades. So overall, I think it is looking good. Gold is an area where I would like to look at. It has broken out of the bullish pennant, and it's continuing to move upwards. I think in February, I would like to see gold going further up because there will be some things happening in February. I'd like to show you this chart out here. This is the 10-year US Treasury chart. And let us go into trading view. So this is the 10-year treasury, and each of these candles is a one-day candle. And if you look at this channel, it's a bullish channel and we have been bouncing in between them. And right now we are on the path to come and intersect the lower side. And I think it could go as low as 4.47. Today, it has dropped 0.93%. That is around 4 cents. So there is a good way for it to go down. Right now, we are on the 21st. Around the end of January, we may have the Fed meeting. Some information might come out. And also in February, Trump is talking about imposing tariffs. He's saying Trump thinking of imposing 25% tariffs on Canada, Mexico in February. So those things could move the market and we could start moving upward again. As in the previous Trump administration, I suspect that with the Fed becoming a little more hawkish, tariffs causing inflation, Trump would probably start openly asking Fed to reduce interest rates, which the Fed may not want to do. So we could see a lot of volatility out there. This is just a possibility. I don't know what exactly will happen. But if we were to look at the charts out here for the 10-year yield, I think we will be starting moving up again somewhere in early February. When the yields start going up, our markets will start coming down. So we have to keep that in mind. Also, we should remember that the Japanese yen unwind trade could also happen. We should keep that in the background. Having said all that, let us go on to look at AI. Google is looking good. It's up 0.42%. It needs to break this diagonal line of resistance up here. Yesterday was a doji candle. When I say yesterday, I mean the last trading day, a narrow range of trading, but still it stayed above the previous 2 days trading. So there is definitely bullishness out there, but MACD doesn't look that great. It is trying to improve, but probably it may improve today and we may break out of this bull flag out here. Next, we look at Tesla, which is very, very strong right now. It's up 2.19% in pre-market trades. Momentum is looking good. MACD is on the mend, and I think today it might go upwards again and mend the MACD and take it to the bullish side. Apple is looking very weak. Warren Buffett sold much earlier, and I think he was looking forward to all these things probably. Apple is looking weak on the charts, 2.10% down in pre-market trades. MACD momentum both looking very weak. Meta is moving sideways, but it has got this channel of support out here, so I think it should do okay, and it may bounce off this support. We'll have to see that. Right now, momentum and MACD both are looking a bit weak. Amazon is up 1.13% in pre-market trades. It's broken out of this bull flag and it's gone upwards. So the next resistance is going to be this diagonal line of resistance, and also another resistance could be out here, which was the all-time high that we had. I'm going to mark that red out here. That was a kind of all-time high that we had, and it's at 228.40. I think the coast is clear for Amazon. I'm looking forward to the MACD mending. Momentum is already pretty good. And remember, for all these companies, we are going to have earnings coming up towards the next week, couple of weeks. So that could also be a catalyst. Microsoft is up 0.45%. MACD is on the mend. Momentum is already up. And I think we'll have to see more improvements today along with the overall market sentiment. So that's also looking positive. Nvidia is up 0.45%, and I think there is a lot of upside in store for Nvidia, provided it bounces off this diagonal line of support. Today it is still above the line of support. MACD is on the mend. Momentum is just picked up to average. It has to go above average. But overall, I'm bullish about Nvidia in this current environment. Then we look at AMD. AMD is trying to break through this diagonal line of resistance. It's up 0.54% in pre-market trades. And I think that we are exactly on this diagonal line of support. MACD has improved, momentum is picking up, but it's still below average. So I wouldn't be saying much about AMD. If it breaks out of this, it's good. If it doesn't, then it will continue on the bear channel. We'll have to watch what is happening today. Right now, I do not have a clue which way it would go. FNGU is up around 1.25%. It has broken out of this diagonal line of resistance of a previous bear channel, and the next resistance is going to be 612, which it has to break through. Looking at the way Google, Tesla, App, and Meta, Amazon, and Microsoft are shaping up, I think with the push from Nvidia and a big push from Tesla, I think we should be able to either challenge or break through this horizontal line of resistance today. That said, Palantir is another positive candidate. It's up 2.08% in pre-market trades. I think the next stop is going to be at 78.86. So and probably a little bit of a minor resistance somewhere around 75.59. I think it's all looking good. The only concern I have is that the MACD has not completely healed. It's on the way, and we ended at just above average on the momentum chart. So I think today pre-market action indicates that we are going to blow past. So very bullish on Palantir, at least for the next 3 or 4 days. That said, I would like to go and have a look at Rigetti. Rigetti is up 3.46% in pre-market trades, and it's above the line of support, so I'm okay with that. MACD is on the mend but needs a lot of mending. Momentum needs to improve as well, so I don't think I can make much prediction about Rigetti. SMR is looking good. It's up 4.92%. It's continuing to follow the reverse head and shoulder target of 32.46. A lot of money to be made there. MACD good, momentum good. I'm not buying this yet because I want to keep my powder dry. I'm stuck in FNGU, as you know, and I'm also stuck in RGTI. I want to clean up those trades before I start speculating further. So I'm going to stay put, but SMR seems to hold a lot of value. If you look at the market sentiment post inauguration, everything is looking bullish, and also we have the 10-year yield coming down. Briefly, I'm going to go to the 10-year yield and show it to you. The 10-year yield is coming down. Pre-market, it's down 1.02%. So overall, I'd like to end with my thesis that we have this, if you look at bonds, we have this 10-year going towards the bottom of this channel, and then it's likely to bounce off from there somewhere in February. Towards the end of January, we'll have a Fed meeting and some news might come up. And in February, Trump is also talking about imposing tariffs, 25% tariffs that will give rise to inflation. And in the past, when inflation has happened, the Fed likes to clamp down with higher interest rates, and Trump would openly challenge the Fed, as he has done in his previous tenure, asking them to reduce the interest rate and saying that the Fed is spoiling the markets because he's hyper focused on the stock markets. So there is going to be that tiff happening, and that could create a scene of volatility, and we'll have the yields going up again, and then it could also prompt the bond vigilantes to come back again. and bond vigilantes can push the bond in a different direction from the interest rate that the Fed might set. So things could get really nasty out there. So we have to wait and see what happens if Trump postpones the goalpost for a tariff further to March or May or something like that when we come into February, which he could do. It could be like the infrastructure week and a lot of other promises that he has not kept. We'll see if he throws out some other shiny object that could boost the markets and take the eye away from the ball, which is tariffs. Then I think overall we'll be fine. So with the Trump administration, I would be looking at what actually happens rather than what is being said, because it's the WWE administration, as I would like to say. There'll be a lot of posturing, there'll be a lot of distractions. So we have to focus on what exactly is happening in the market in order to save our capital and probably make a little bit of money here and there. Overall, my message is that today is going to be a positive day in the market. It's going to be a bullish day in the market, and we'll take stock of everything in the evening and see what happens in the pre-market action tomorrow. We'll take it one day at a time, because that's the way we have to play. Anything can change anytime with the new administration. With that, my friends, I'd like to bring this video to an end. Thanks and have a great day.